Welcome to this video. This will be a primer for my new TV segment on Business Day TV called Trade of the Week, and this week we will be covering Stadio. So in this video, I want us to take a look at Stadio and look at what has been fascinating the markets, especially for new, perhaps more or less experienced investors who don't seem to understand the synergies between fundamentals and what actually happens in the market. Because what we've seen is since listing, Stadio has performed superbly. They've beaten their estimates as their pre-listing statement, and yet the share price has just tanked. So here we'll just be looking at some of the synergies and what investors need to look at rather than just focusing on the company internal fundamentals. So just some basic facts on Stadio. Listed 3rd October 2017, and this is the top shareholding, top 10, which accounts for about 60% of shares in issue. So that gives us a rough estimate of about 39% free float. So if we look at the student numbers, what I have in orange are the targets as per the pre-listing statement, and in blue are the actual numbers. So we can see from 2017, they've beaten their targets, and there's been a steady increase in student numbers. So this is very positive, it's very good. And this has obviously then translated to revenue as well, except for maybe this little blip in 2017. Since then, they have more than exceeded their targets. So the revenue has also been on a very good, steady incline. The headline earnings, similar story. It's been doing well, except for maybe if you look at 2020. But again, here we have to put it in perspective because there was a fair value adjustment in respect of the CA Connect acquisition, as well as increase in loss allowance. So again, it's not enough to just look at the number and say they made a headline loss. You have to put it in perspective that there was the acquisition as well. So when you look at Stadio, they use the core headline earnings as their main parameter, as this removes all other sort of once-off items or adjustments, etc. And when we look at the core headline, we can see that there has been a steady increase, and also we can see the core headline earnings per share have also been pretty good. So fundamentally, everything has been solid, and just this table is the 5-year financial overview, and we can see that from a numbers perspective, they've been doing very, very well. So how did I get interested in Stadio? So as I was building my portfolio, which I call the post-COVID portfolio, I took a quick look at Stadio from a technical perspective, as I always do with any stock that I take an interest in buying. I first do a technical evaluation, and then I look at the fundamentals if I like what I see technically. So this started way back in October 2020 on Twitter, and I was chatting here with one of the more prominent small cap analysts, who I have hidden his identity as I didn't get permission from him to show the full conversation and his identity. But what we covered here, as you can see, I asked him if does he have an opinion on Stadio, and I said it looks like it's bottomed and just needs fundamental stimuli, and I gave him here my analysis from a technical perspective. So let's take a closer look at what I said exactly here. So what I noticed was from this peak at 919, the market basically just plummeted all the way down to 75 cents. But from an earlier trade perspective, I could see that the market was making an A, B, C zigzag. And as per my commentary here, I say from the 919 peak, the stock went through an ABC zigzag bear market. Wave C is a 2.26 multiple of wave A, just above the 2.23 Fibonacci multiple. So what I'm referring to here is the length of the C wave relative to the A wave. And being an electrician, I'm then linking everything to the Fibonacci relationships. Then I say from the 75 cents low, we see a series of higher highs and higher lows. From an Elliott wave perspective, these higher highs and higher lows, if the wave count is correct, suggest the stock is in the early stages of an impulse rally. For the current wave count to remain in force, 117 cents must hold. A break below 75 cents invalidates the entire bullish outlook. So this was back in October 2020 when I gave this initial analysis, and I subsequently bought Stadio at these levels around 160. So how do you protect yourself from uncertainty? As investors, I'm sure you've either found yourself asking these questions or you've heard this. The fundamentals are solid. Why is the share price going down? The earnings announcement beat expectations, but the share is down again. When and at what price will the market bottom? The market knows best and is never wrong. So I'm sure at some point in your investing career, you have come across situations like this. And one of the most famous is it is not timing the market, but time in the market. I disagree with this completely, and I have my own version, which is time in the market is important, but timing the market will give you the best holding period return. And why I say that is simple. A lot of professionals and anyone who doesn't believe that markets can be timed, it's really down to the simple fact that they don't have the knowledge to, or they don't know the skill, or they don't have the skill. So market timing really is about understanding how markets behave, understanding investor psychology, and really understanding the market itself, how it behaves, and not so much the company fundamentals or just looking at numbers in isolation. So this is one of the quotes I like from the former CEO of Stadio, and this was from a business day interview, and this was the headline: "No rocket science, just market logic. Stadio shares will recover soon enough," says outgoing CEO. And this was on the 15th of March 2020. And as we know, this was just before we went on, to a hard lockdown, and the share was probably trading at around 150 then. So there was some concern that the share price just keeps going down. And to quote the CEO, or to quote the article, it says the CEO of private higher education group Stadio says he is not concerned about the company's collapsing share price. He says this is no reflection on the performance of the company or the demand for private tertiary education. The fundamentals of the company are absolutely sound. The growth is great. There's a lot of excitement about this space. I can only believe it has to do with the broad global situation and the confidence of investors in South Africa. Can't argue with that. And unfortunately, it just goes to show that no matter how well a company performs, it does not guarantee that the share price will follow suit. So how do I protect myself from uncertainty? Well, more than fundamentals, I actually spend a lot more time studying market cycles, following that up with event studies, which then relates the fundamentals and how the market reacts to those fundamentals. For example, an event study can be analyzing how the market reacts just before and after an earnings announcement. So that really gives insight as to how the market reacts, which is the most important thing if you want to be on the right side of the market. So the process is market cycle, event studies, and then do a forecast. And when it comes to this, I've read many books and built models, but the main books that if anyone has an interest in understanding this process is this one here, Mastering the Market Cycle by Howard Marks. One of the most complex yet informative books is Stock Markets or Why Stock Markets Crash by Didier Sonnet. This is a very, very complex book, but once you delve into it, it's really fascinating what you learn from this book. And my favorite of them all, The Elliott Wave Principle by Frost and Prater. key to market behavior. This is almost sort of the Bible for anyone who practices the Elliott wave principle. Anyone who does Elliott wave probably started by reading this book, and it's really very, how can I put it? It's one of those eye-opening aha moments when you read this book and you actually realize, oh wow, so the market really can be patterned. Market movements are not random at all, and that's what I believe, that markets are not random. They are patterned and they can be easily forecasted to a certain degree. What I have here is a long-term chart of the all share index, starting all the way back here in 98 to the low of 2020, just after COVID. I won't go through all the events that took place, but what is obvious is the markets don't move in a straight line. We get periods where markets rally and then they correct and then they rally and correct, and sometimes they even crash. And what we've seen recently, post the 2008 financial crisis, was the longest bull market in the JSE history, which peaked at 61,777 points on the 22nd of January 2018. And what is of interest is, from this peak in 2018 to post-COVID, this was actually the most drawn-out bear market that the JSE has ever had. It took 26 months and the market went down almost 25,000 points. And what is of interest here is, when we look at Stadio and when it was listed on the 3rd of October 2017. And we can see that from this chart, it was listed while the JSE was off its all-time highs, and into the bear market. So we can already see that when you look at the greater economy or the greater market, the JSE was in the bear market when Stadio was listed. So already you have a macroeconomy situation where you have a newly listed unbundled company, but it's being listed at a time where the overall market is bearish. So anyone who does a top-down approach knows that you have to look at the greater economy, look at the sector, and then you focus on the company itself. And what we see here, and as we will see, the greater economy always overpowers the internal fundamentals. So the macro fundamentals are more powerful than the micro fundamentals. So looking at the sector that Stadio is in, I'll start off and look at ADVTECH, which was listed way back in 1987. And starting here from 2001, we can see it had a great bull market all the way to March 2017. And what I have here is the Elliott wave count, which shows that the share went through 5 waves and then corrected significantly. You can see here it lost 72.5% of its share value. So ADVTECH in this sector can be seen as the leading indicator, or as the leading indicator, as it's the share that has been listed the longest, and Curro and Stadio now are basically competing with ADVTECH. When we look at Curro now, which was listed back in 2011, also went through a 5-wave, very, very strong bull market, but it peaked even before Stadio, peaking in December of 2015, and then went through this very, very strong bear market, which took its share price all the way from just under 50 Rand to just below 4 Rand 50. So Stadio, or Curro rather, has also gone through a significant bear market. And what's interesting here is, since peaking in 2015 and going through the early phases of the bear market, this is actually where the unbundling of Stadio happened, which was on the 3rd of October 2017. So again, this just emphasizes that Stadio was listed during a bear market in the JSE and within this sector. So it was really a case of bad timing to list. And I know most companies wouldn't concern themselves with the state of the economy or the market. When the time is right for them to list, they list. But perhaps this can also be another area of study where we see how certain stocks perform post-listing depending on where the market is, whether in a bull market or bear market. I think it's something that's very fascinating for further study. So when we look at all three of the shares now, and what I have here in the candlesticks is ADVTECH. In orange, I have Curro, and in blue, I have Stadio. And we can see that there was a very strong correlation between Curro and ADVTECH from when Curro was listed, and Curro actually peaked before ADVTECH and then went through this bear market. And when Stadio was listed, both ADVTECH and Curro had peaked and were in bear markets. So what were the chances of Stadio listing and blowing the lights out? I mean, initially the share was listed and it had a rally, but you can see this rally correlates with the rally that Curro also had. So within bear markets, you'll always have those bear market rallies. But in the long term, not too long term, looking at like maybe 2-3 years, the whole sector went down together with the market. So as much as you'll hear lots of stories as to why the share was down, many commentators, analysts will report many reasons, but from my perspective, this was the reason why Stadio went down and the share went all the way from 9 Rand to below 1 Rand. It was because the greater market and the sector was in a cyclical bear market, and therefore the share really stood no chance, irrespective of how good the fundamentals were. So where to now for Stadio? Well, that's what I'll be unpacking on Tuesday, business day, trade of the week. Keep a lookout for that one. And thank you. I hope you learned something from this video, and I look forward to recording the way forward and trade of the week on Tuesday, where I'll be covering Stadio and giving insights on what my forecast is for the short to medium term. Thank you.